Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Minute for Monday, May 17, 2021. We had a lot of market moving economic data at the end of last week, so we want to talk about some of that here today as well as lay out our views and what we think is going to be important this week in the markets. So towards the end of last week, we had two reports that came out that give us a pretty good idea about the framework and the foundation of this economic recovery. The first was CPI, which stands for the Consumer Price Index. This gives us a pretty good idea about how inflation is in the economy in the here and now, and how the prices of different things that consumers spend their money on a frequent basis, how they're changing month over month. So the estimate was for an increase in the CPI index of 0.2%, and the actual number came in at 0.8%. So the actual number was much higher than the estimates, and we think there's a few short-term pressures, inflationary pressures that contributed to this number. The first is the Colonial Pipeline hack, which we know put immediate pressure on prices at the pump. And the second is increased labor costs, as employers are having to pay a lot more and a lot higher wages to draw people out of unemployment because of the expanded unemployment benefits. We've seen several states move to try to cut back on these expanded unemployment benefits to try to force people back into the workforce, and it'll take some time for the data to reflect if that will be effective. We know we have 8.1 million job openings in America right now, and last month only 266,000 people came out of unemployment to go back into the workforce. So until we get some of the issues worked out with the labor costs and the unemployment benefits being expanded to a point that many workers are not incentivized to go back, we're likely to see some stress in the labor and job markets. As far as inflation is concerned, we know building materials and certain things like that have extreme inflationary pressures right now. But over time, technological advances, and automation, as well as having more transparency into prices, should bring down inflation and act as a deflationary pressure to try to cancel out some of the near-term pressures we're seeing. As far as economic data, we don't have any earnings reports this week. We're outside the bulk of earnings season now. None of the companies that we own are being tracked and reported this week. And the market, what we want to see as far as the broader market is concerned, is we want to see some of the action that happened Thursday and Friday of last week, where we saw technology shares regain their momentum and regain their leadership in the market. We want to see that continue. The technology sector has undergone a correction, and we think now money will rotate back into that sector, and it will move back atop market leadership. This week, we're not seeing much activity in interest rates. The 10-year yield, which we've spoken about ad nauseum, has not moved much over the last week, and that tells us the market is starting to get a grip on the fact that inflation, while it's something we will always consider and it will always be on the horizon, it's not something that's going to throw off this economic recovery. In some positive COVID news, we are seeing the U.S. death rate has dropped to the lowest point since this data was being recorded way back in the beginning of the pandemic. So I think that really speaks positives to how well the vaccine rollout has come and how far we've come, just in the grand scheme of things in battling COVID. To see those numbers is very encouraging. We're seeing more and more states reopening. The CDC guidance has been updated to drop the mask mandates in many of these places. So this just kind of confirms to us that the economic reopening and the economic renaissance that we've seen over the last 6 months will continue as states get back to business and continue to reopen fully. If you have any questions, we encourage you to reach out to us. We're always here to talk to you about the things that matter with your money. Thank you guys for tuning in. We hope you have a great Monday, and we'll see you back at the end of this week for the Heritage Market Pulse.